The question is, should I take an interest only loan or a principal and interest loan? For that, the answer is simple and yet complex. From a bank's point of view, principal and interest is a much better product. From your point of view, principal and interest again is a much better product because you get better pricing, better servicing, and with every single installment, you are able to pay off your principal. However, interest only makes sense. Interest only makes sense when you are short on your cash flow, when you need a 2-year or a 3-year interim arrangement where you're trying to manage your cash flows, or you've got enough money to put in offset and you don't know what you're going to do with that equity cash out, then you can go for an interest only loan. But in very limited circumstances, interest only will make more sense. Other than that, by and large, principal and interest is a far superior product. Think like this: with principal and interest, you are basically paying off your capital, or you're building your capital every single week, every single month, every time you pay off. So every single day you are paying off a part of the principal loan, which means you're building your capital. But with an interest only, you are actually only paying the interest, and principal stays where it was when the loan was sanctioned, which means banks are getting richer, they are making more profits at your cost. So in my personal view, if you can afford principal and interest and you are comfortable with the cash flow, then that is the go-to product. People have different views in the market, but some of them have not studied finance. We come from banking and finance background. So in your interest, P&I should always take a precedence unless absolutely critical to go down the path of interest only. If you have more questions like this, reach out. Let's talk.